Hello everybody, it's Jason with Investing Logically. Hope you guys have a wonderful day today. I would say we're doing this after like 4 months, but today's video is just going to be like a short video on the US stock market, like the NASDAQ, the tech stocks, and some of my plays. Some actually done really good, so we're going to go through that, and we're also going to go through my 10k portfolio challenge. So let's get to it. During 2020, during the COVID period, the NASDAQ went down, I think it was 22%, then went straight up. It went up 100% throughout 2020 to 2021, and we would expect for a stock market correction, right? So that's what happened this year. This correction happened around March. It dropped 10%, then went straight up again, then it went down, and now it's up in an uptrend. The reason I say this wasn't a crash is because usually corrections are 5 to 10%, and crashes are more like 20 to 40%. We're seeing this was a crash, was nearly 30%, and during the Great Recession that was 40%. That was a crash. So yeah, basically I want to address something. During this market correction, tons of people said that tech stocks were done and you should sell them. We invest for the long term. We don't care about the short-term movements. These short-term movements are normal in a volatile market such as the NASDAQ. Investing is pretty simple. If you believe in the company, you believe in the fundamentals, you believe in the future, then invest for there. Don't worry about the short-term movements. Don't worry about what other people are saying. So that's basically what I would do. Basically what I did was, with my 10k portfolio challenge, I was going to transfer to my other broker because the fees were too high. I think it was the FX fees, because I am in New Zealand and I'm trading US stocks. So that's why I sold, and I tried to transfer to my other broker, but the customer service wasn't great, so I just figured out I should sell and just transfer them myself. So I just sold, I think I sold $1,000 worth, and I just transferred that to my other broker. So I deposited money from my bank account. So that's basically what I did. I do not want to hang around with those large fees, and the customer service wasn't great either. And also, for the platform using, it was called Stake, and the user interface was really poor as well. So that's why I sold. It was just my personal preference, so I'm not saying that this platform is bad. I'm just saying that for me it was bad, so that's why I changed and I sold all my stocks. So yeah, that's basically it. It's not gonna be too long, so let's get to the stocks. So now I'm just gonna give you guys an update about the stocks during this market correction. So the first stock on the list is called Tesla. Pretty sure you guys know about this one. Ticker symbol TSLA. We can see during the correction they went down to $560, and if you guys bought back then, you would have been up 20%. Okay, during this time you guys should have thought like, has anything changed with the company? If not, then continue to buy in the dips. So the only reason we sell stock is if they come up with some bad news, such as filing bankruptcy or something worse. I can't think of a better example. I do think Tesla is going to go up to at least 1,000 a share at the end of this year, if not next year. This is Ideonomics. So basically this was my easy money play, but this could easily be a long-term play. Okay, actually didn't go down as much. I told you guys to buy around the 319, and then it dipped, and this would be a good buy opportunity, so it would have been up 8%. I still believe this long term. If you guys have this, continue to hold. Next stock on the list is called BNGO. Ticker symbol BNGO. So this went as low as $5.30. So if you bought then, you would have been up 35% or nearly 40%. So basically, the reason I like the stock is because they don't have any competitors. Their products are really different from other genomics companies. So yeah, I have a long-term hope for this, but since this is volatile, only put money you want to afford to lose. I mean, why did I say that right? Only put money you can afford to lose. So that's how I'd play this one. So this one is a really high risk stock, and if you guys are really scared, put your 10% stop loss so you can buy at a lower price. That's only if you care about the short term, but long term I think you'll find. Just do your research and don't base your decision on me. So yeah, next stock on the list it's called CHPT. So this one's an interesting one. Okay, so basically during the market, during the market crash, they had a double bottom, or triple bottom actually. So right, they went as low as $20, so $20 here. So you had 2 opportunities to buy at $20. You had 3 actually. So if you bought at these bottoms, you would have went up, yeah, 45%. So it's a charging station, the largest charging station provider. I do think this is going to do well in long term. I see this going 2x by 2023. Joe Biden just released his infrastructure plan. This was he said to import more charging stations in the United States for electrical vehicles. So yeah, this is good news for ChargePoint. So a good entry would be $30 to $31, and then just ride this out, this Peloton. So this one went all the way down to $82. So basically there was a kid that died on their treadmills, so that's why they went down, and there were a lot of short sellers shorting the stock. And if you bought down here, it would have been up 50%. That is really, really good. So that's the end of the video. Just a short little video for you guys updating on my stocks and just the stock market. So yeah, basically during the correction, if you guys just bought a dip, kept updated on the news, you guys would have been doing well in the correction. So remember, these were days of my opportunity. So that's it from me. Hope you guys have a wonderful day today. See you guys next one, and happy investing.